Good morning, everybody. Welcome to this morning's episode of Pre-Market Forecast by Blue Collar Trading. Today is Friday, January 24th, coming to you about 6 a.m. here, East Coast time. A little bit of an earlier start. I got some electrical work I need to do out in the field a little bit later, so doing this pre-market forecast slightly earlier than what we normally do. But we have the NQ pulled up as usual. We can see yesterday we were looking for a sideways day, and that's exactly what we got. We got basically dead sideways. We are flirting with the highs of 2 days ago. In general, we are looking for a little bit of a pullback here. We're at the +2. This is a pretty big move. I mean, we went from the -3 to the +2 from the FOMC. So that's a 5 standard deviation move. In general, you'll see some sort of a pullback. We have noted from the bottom of this, though, we have noted that this is a healthy move in the sense that every time we get a break, we get a retest, right? We go from the plus, or we go from the -3, we break the -2, test the -1, we come back, retest the -2, we break the -1 to the VWAP, we come back and retest. So when we see that, that is considered a healthy move. So that's probably why we're not really getting as much of a pullback as what we would normally see here, because this is just unhealthy, so you get a pullback. Same thing here. This is unhealthy, so you get a pullback. Same thing with this down move. That was an unhealthy. We got this pullback. So this move here is a little bit different because we have retested all those levels on the way up. So we'll just have to see what happens. Today's forecast, I think we're leaning on, again, I think we're leaning on the sideways to down. However, markets can do crazy things. This is one of those levels too where we could just go absolutely parabolic, and for the medium term, and we'll show you another chart basically here in a second what that means. But if we look at the volume, I did want to point out something here. You look at the volume here, you can see this sort of descending wedge on the volume on both on the daily and this 4-hour. So when we see that happening, basically once the volume descends and it gets really small, typically that's when a big move happens, either to the up or down direction. Once you sort of start to run out of volume, that's typically when the moves happen. I mean, every move you see, right, volume trickles down to almost nothing, and then you get a big move, volume trickles down to nothing. So we are sort of very light on volume, and it is descending day by day. So typically that's ramping up for a big move. We could either have a blow off top or a short-term parabolic run, or we start to come down. So look at rates real quick. Rates are staying steady to the upward direction. That's not good for inflation. If that continues the trend, the financial system as a whole could, things could really start breaking. I mean, banks, without getting into the nitty gritty too much now, but the further rates go up and bonds go down, banks are just sitting on huge unrealized losses. So if that trend continues, basically the backer that banks have continues to dwindle and dwindle. And so then if people start to withdraw money, banks don't have it at all. I mean, the percentage of what banks actually have to what the deposits are is minuscule. So it wouldn't even take that much of a bank run to really start to cause stuff to break. So we're not at that point yet, but if the trend of rates continues to go up and the prices of bonds continue to go down, things could start breaking. So we'll see. We're also coming off the longest inverted yield curve ever in history. This was the longest that it was inverted. So we'll just have to see, but we're taking it day by day. We know on the daily, this 4-hour chart, we're bumping our head off of this +2. In general, we would see a pullback. So the level, we're not looking to go short yet. we'd have to see prices under 21,850. You know, if we start to break this +1, we could see a pretty quick move down to the actual VWAP here. That's about a 300 points of NQ in between there. That could happen relatively quick if that happens. If we stay sideways and if we start to break this +2, the opposite effect could happen. We could get a pretty, you know, rapid move from like 22.1 up to this 22.4, 22.450. So as we speak, right this moment, we're kind of in no man's land right here. We know the levels that we have to get below. We know the levels that we have to get above. We'll just have to see what happens. Part of the problem is we're going to flip over to the ES right now. Part of, not really a problem, but we're just a little bit out of sync. The ES is a little bit higher in its channel than the NQ. So it's just causing, whenever you have stuff not lined up, the moves tend to not be as biased to one direction or the other, if you will. So we're kind of at this longer term +2 channel as well. You can see this longer term standard deviation here. We're basically at that right now, and we're above this short term +2. So we're a little more overheated on the ES. So if that continues to grind sideways, it could prevent the NQ from having a sharp move to the upside. So in just kind of a weird spot, we are above yesterday's VWAP. We can see down here in the lower time frames. So if we are going to start to roll over, we'd have to see that break first, you know, 61.30 area. And if that breaks, we could see a pretty quick move down to this +1, so 6,090, and then below that, we'd be looking for a target of like 6,050. So, yeah, there's no real catalyst today. If we take a look at the news, not really any news. I mean, existing home sales, 10 a.m. Eastern time, so that could move markets a little bit. That's usually not really much of a market mover. So let's actually take a look at next week. What do we got next week? Durable goods. Oh, next week's FOMC. Okay, so we got some news next week. Looks like January 29th. And then some growth, core PCE. So yeah, next week we could have some catalysts. So that could be a reason too why we're just kind of not really doing much. A lot of times, you know, the news is what makes there be a catalyst to actually get something to move. So these moves that we're expecting, we could just see a little bit of a delay. But we see the same volume down channel here, right? Descending volume. When we see those wedges, it's usually ramping up for a big move either way. If we go up, there's going to be a lot of hedging at the exchange level to the upside. It could be a very parabolic move. And if we start to go down, it could be the same. One quick thing, I did want to look at the long term. I just wanted to show you guys what a parabolic move would look like. So if we go all the way back to the .com, and we're basically maxed out on the charts, but we can see October 99, and the market was already kind of coming up here, but then this last handful of months, we basically went parabolic. We went up 106% in basically from October of 99 to March of 2000. So 4 or 5 months, we basically just went up 100%. And then we know what happened. We went down basically like 80 something percent. So that was a big bubble. So are we expecting that? I mean, we could, you know, if we go parabolic, we know on the longer time frames, we got some deviations up there. You know, we could go absolutely parabolic and then really start to roll over. We'll just have to wait and see. But that's all for today. Good luck, traders. We don't expect anything too major today. There's no real catalyst. But I hope this helps. All right. Good luck out there, Have yourself a great day.